If you just joined Navy Federal, you're about to make some really expensive mistakes that could cost you thousands of dollars and keep you from getting those high credit limits that everybody talks about. I've been banking with Navy Federal for years now, and I've watched so many people mess this up. They join an amazing credit union, they get excited about those high credit limits, and then they do everything wrong from day one. These aren't just small errors, they're the kind of mistakes that will get your account shut down, keep your credit limits low, or worse, get completely locked out of their best products. Navy Federal operates a bit differently, and if you don't know the insider rules, you're gonna be getting treated like every other random person walking through the door. Make sure that you watch this video to the very end so you don't become one of those people. The first huge mistake that almost everybody makes when they join Navy Federal is staying with the basic free everyday checking account that they give you when you sign up. Look, I get it. When you first join Navy Federal, especially if you're not military, they're gonna automatically set you up with the free everyday checking account. There's no monthly fees, and it seems perfect, right? But that's wrong. Here's why most people don't understand about Navy Federal. They have something called an internal scoring system. In a nutshell, you can think of it as a relationship score. It goes all up to 450, and this score helps with credit card approvals. It's an extra layer on top of your personal credit score. That basic free checking account barely does anything to your internal score. I learned this the hard way when I first joined. I kept that basic account for like 6 months, thinking that it would be a smart way to avoid fees. When I applied for my first credit card with them, my limit was much lower than I thought it would be. The one that you want to get is the flagship checking account. Yes, you're gonna need to keep around $1,500 in there to avoid a $10 monthly fee, but this account tells Navy Federal that you are serious. The flagship account doesn't just help you with your internal score, you also get ATM rebates up to $120 a year, which means that you can use any ATM and they will reimburse you up to $10 every month. Plus, you earn actual interest on your money anywhere between 0.35% to 0.45% APY depending on your balance. Most banks like Chase will give you a pathetic 0.01% on your checking account. Navy Federal is giving you up to 45 times more. But keeping the wrong checking account is just the beginning. The second mistake is far worse, and it could be a reason on why a lot of people get denied for everything when they apply. If you remember nothing else from this video, remember this: not setting up direct deposit with Navy Federal can be one of the worst things that you can do. I cannot stress this enough. Direct deposit is everything when it comes to building a relationship with Navy Federal. And here's why most people mess this up. They think that they can just open an account, let it sit there, and they can apply for credit cards and loans whenever they want. That's not how most credit unions work. Navy Federal makes money by lending out the money that members deposit with them. If they can't count on consistent deposits from you, why would they trust you with their money? I've seen people with good credit scores get denied for Navy Federal credit cards and loans because the relationship was thin. Meanwhile, I have seen people with credit scores in the high 500s get approved for multiple credit cards because they have built that relationship. Having direct deposit to your checking account is far more important if your credit score is on the bad side to fair side, because you're gonna need more relationship touch points for them to approve you for the products. Now, the third mistake might seem small, but it's actually costing people thousands of dollars in potential credit limits. Most people think pledge loans are unnecessary or just too complicated, so they just skip them completely. This is a huge mistake, and I'm gonna tell you exactly why. A pledge loan, which is also called a savings secure loan, is basically where you loan money to yourself using your own savings as collateral. It sounds weird, but this is actually one of the most powerful relationship building tools that Navy Federal offers. So here's what happens when you skip out on the pledge loan. You miss out on building that installment credit history, you miss out on boosting your internal score with Navy Federal, and you miss out on showing them that you are a type of customer who uses multiple products. These loans can go all the way up to $100,000. I know that most people are not gonna get a $100,000 pledge loan, but how this can really help is by structuring your credit profile. Because if you were to think about it, if you had $100,000 in the bank and you decide to lend that money to yourself, you would automatically have a $100,000 loan reported to the bureaus. But here's the biggest mistake that people make with pledge loans. They think it's gonna hurt their credit because of a hard inquiry. Pledge loans don't require a hard pull on your credit. The right way to do a pledge loan is to get whatever amount that you're comfortable with, then immediately paying off 80 to 90% of it. This leaves you with a tiny payment, and it shows Navy Federal that you are responsible. And it gives you an installment loan on your credit report that's almost paid off. Remember, 10% of your credit score comes from credit mix. If you only have credit cards, then you're missing out on easy points, and the pledge loan fills that gap. But even if you do everything right with your accounts and loans, the fourth mistake can destroy your progress in just one application. This might be the most expensive mistake on this entire list. People hear about Navy Federal's insanely high credit limits, 25K limits, the 50K limits, and sometimes even higher. And they want to get their hands on these cards right away. They join Navy Federal on a Monday and they apply the same day. Now, this can totally work out if you already have a great credit score and credit profile that backs your application. But here's the thing. You should still be doing credit prep before your application, just like any other application. I would totally take advantage of the pre-qualification tool. Now, there are whispers saying that this is not the most accurate, but it's definitely worth a try since it doesn't hurt your credit. Navy Federal will be pulling from your FICO 9 TransUnion credit score, so you want to make sure that it is in the best position possible to give you the best odds. The reason why you should prepare for your application is because most of the time, this will be the largest amount of credit that you'll get at one time. Right now, Navy Federal is allowing credit limit increases after the first 3 months and then every 6 months afterwards. Currently, the highest you can get right now is $8,000 per request. My flagship card is currently at $57,000. The max credit limit that you can have across all cards is $80,000. There are some workarounds for how to shift credit limits, such as requesting a balance transfer or closing out a card and asking them to reallocate that limit to an existing card. But here's what most people don't realize. That initial credit limit that you get matters way more than you think. If you get a low limit right off the bat, you're gonna be getting stuck requesting those small $8,000 increases for years just to get where you could have been from day one. I've seen people with excellent credit limits get approved for $5,000 limits because they rushed the application. Then they spent the next 2 years slowly building it up. Meanwhile, someone with a similar credit profile who prepared properly got $25,000 right away. But there's one mistake that's even worse than rushing into credit cards. This last mistake can get your entire account shut down permanently, and thousands of people are making it right now without realizing it. Navy Federal has been cracking down hard on people who exploit the membership eligibility. They've shut down over 100,000 accounts in the last few years because people are giving their access numbers to people who don't actually qualify. I get it. You join Navy Federal, you start getting those amazing benefits, and you want to share the wealth. Your friend needs a car loan, your cousin wants a credit card with a high limit, and you think that you're going to be helpful giving them your access number so they can join. But here's what happens when Navy Federal investigates. They're going to look at the relationship between you and the person that you sponsor. Are you actually family members? Have you ever lived together? And is there any legitimate military connection? If they find out that you sponsor someone who doesn't technically qualify, both accounts are getting shut down. Not suspended, not warned, completely closed. I know someone who made this exact mistake. He sponsored his coworker because the guy was struggling to get approved for an auto loan elsewhere. A few months later, Navy Federal did an audit and realized these two accounts weren't related and they never even lived together. And they closed both accounts. My friend lost his Navy Federal membership, his credit cards, and everything else. And there's no appeal process. He just had to pay the remaining balances that he had. By sponsoring random friends, coworkers, or people that you meet online, you personally run the risk of your account getting shut down. Now here's a bonus mistake that I see a lot of people make, and it comes from understanding how Navy Federal really evaluates new members. A lot of people think that opening an account is enough. They're opening with checkings or savings account and just leaving it empty. And they're wondering why they're still getting low credit limits or getting denied. Here's what they're missing. Navy Federal wants to see that you're actually using their services and that you have some skin in the game. There's a strategy called seasoning your account that most people don't know about. This is where you would deposit anywhere between $1,000 to $5,000 into your account and just let it sit there for about 3 to 6 months. This shows Navy Federal that you have financial stability and that you're serious about the relationship. Now, I'm not saying just to park your money there and forget it. If you can make Navy Federal your primary place where you bank and have your money working for you either through direct deposit or regular transactions, that's even better. But if you're not ready to make Navy Federal your primary bank yet, then at least season your account with a decent balance for a few months before you start applying for the premium products. As a disclaimer, this will matter way more if your credit profile is thin or your credit is on the lower side. Now that you know how to avoid these costly mistakes, there's something that I didn't tell you at the beginning of this video. Everything that I just shared with you is completely useless if you don't know which Navy Federal credit card to actually apply for. Because Navy Federal has a bunch of different credit cards, and some of them are amazing while others are a complete waste of time. If you pick the wrong card, you could be leaving thousands of dollars in rewards on the table. Make sure you click on this video right here where I rank every single Navy Federal credit card from best to worst. I'll show you exactly which cards to go for and which cards that you should completely avoid. I'll see you in the next one.